Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Wednesday, right now, didn't really have much news at all this week. We had a little bit on Monday, but right now, Wednesday, it looks like it's still a pretty clean day today. There's a little orange crude oil inventory reports at 10:30. That's an every day, every weekly type of thing. It does move the Canadian market a little bit because it's all pretty much oil related. Tomorrow's going to be the day we're going to have to really look out for a little bit. 7:45, we have some Euro news, and at 8:30, again, some more Euro news. So today should be relatively a normal day. Be careful of the CAD, US CAD, and anything CAD related because of the oil. Other than that, it shouldn't be too bad. Now go to our Hercules and see what's hot, what's not. And right now I'm looking to see that you see the New Zealand is strong on the 1 hour, on the 30-minute, and on the 15. The yen is weak on those three. Now the yen is starting to get a little bit of strength here on the 15. So I'm going to stay away from the yen pairs right now. We're getting a little bit of this chart up here, the 5-minute one, is where I'm looking to see where the pullbacks are coming in. If everything is pretty stable on these bottom three, or the two gray areas at 30-minute and the 15, if they stay pretty stable and you get a change, start moving in the 5-minute, I'm start looking at that as being more of a pullback more so than a directional change. Once these start flipping over, then that's more of a directional change.
Hey, can you do me a favor before we jump into a pair?
What's that?
Daniela has a question about the pound yen, and I've asked her to enter her entry level, her stop level, and target in the chat. I'm watching that for that. She apparently got into it on a 1 hour short on a 1 hour chart. And so I'm looking at it now. We'll get your opinion too.
Pound yen. So right now the yen is pound.
And the question really would be: is this a swing trade or is this a scalping? Because if it's scalping,
I'm not seeing a scalping. Maybe just I'm saying that when I'm looking at this, I'm seeing the pound and the yen on the 30-minute are right neck and neck. They're both a 1 and a 0.
Yeah, and I'm looking at the chart. So I'm looking at. Well, she must have already got in, and I don't know.
I'm looking at the momentum. I'm looking at the momentum. So let's go to the chart here.
If it's a swing, then that could be a problem either way because it looks like it wants to go long.
Pound yen.
Pound, British pound,
yeah.
Japanese yen.
And she entered she's on the 1 hour, so this almost looks like an intraday type trade.
Let's see, am I still sharing my pound yen screen now? Okay.
Yeah.
Okay, so let's take a look and see where we're at in input 15-minute. That's good. Right now, where are we at here? Let me move this down here a little bit. Still trying to get my charts a little bit.
And I'm looking at the 1 hour with the 15-minute. I don't really know if she's a swing or not. If it's a swing, then we don't need to use a 15-minute fib tool.
Well, let's just take a look and see where it's at.
Yeah.
Right now we're looking at this is the 60. Let's see, we go from here to here. That's about 60. That should be on the yen pair. The yen pair is a little bit different on this. So right now we're looking at what is it? 12 bars, 3 hours volume. Why is that not C1?
I would not been short here, to be honest, if she's been short anywhere recently.
Let me get on the euro yen here. The pound, it changes it back to the pound yen here on this one. I've been looking at when I'm looking at the yen pairs, I've been a little bit different as far as I've been looking at the zones a little differently because of the value of the yen. So rather than just taking, I've been looking at either two of the blues of the 15-minute zones, or I've been looking at a 1 hour chart. And the reason being is because of the range in between the levels on the 15-minute. 15-minute. Okay, here we go. Now we got, so right now we still have the pound is 15-minute chart. The yen is still stronger by 3, which is pretty good, which isn't too bad. Right now, I see it's going sideways in between this blue level and this green level. Now you said, as I was
She's
saying
short.
earlier, and you're short. Well, right now there's no real, I'm not seeing any real clear direction.
Yeah, it's just kind of a messy. Again, she entered on a 1-hour chart, so
Yeah.
I'm looking
This
at.
is
I can see why.
What's that one? It's at 118 pips. See 140, 150, 44 to 49.30. That's let's see. I'm trying to do the math here real quick.
150 short
44,
would have been
44
interesting.
and 70. That's about, yeah, it's 111 pips. And so that's going to draw the range here. In fact, it's right in between, right, it's right in the middle. I'm just going to use this too for top and bottom. We're right at the 50% line right now on this one. Here's our lower 25%. So we see our zones here. There's that one. And there is this one, the upper 25, roughly speaking.
But this goes if she's scalping.
Well, I would say that with the range of 111 pips, that could be a swing trade as well, wouldn't you say?
No, not with this pair.
Not with this pair, okay.
No, not with this pair. This pair moves a little bit faster, and
we say she's short. Is that right?
She's short on an hour. I would have waited. I'm guessing.
What time did you get in tonight, Danielle?
She says 1 sec.
Yeah, she's working on it.
Okay.
I'm guessing she got in around 149, maybe 80-ish. I'm guessing just by looking at it, maybe 149.85-ish. At the very top of it would have been almost like a wedge forming, and it's broken the wedge, retested the top of the wedge. I'm thinking this thing's going up to the 150.40 area.
150.40.
Mm-hmm.
It is above our moving average. We'd had a little test of the moving average. We'd had the crossover. Yeah, I would, if I'm looking at the trend on this one.
She put 149.379 to 149.889.
Yeah, this is probably, if you're scalping, you're probably going to experience a loss on this one. If you're swing trading, it depends on where your stop's at.
See, I'm seeing we had a little trend. It broke this. Mm-hmm. Well, we had a pivot here, came up pretty much a double top there, came back down, broke this level, came down, wedge just wicked it down into the moving averages. Right now it's basing in this. I'm still seeing it.
It's in no man's land.
Well, it's in no man's land, but I think right now I'd be a little bit in favor of the short side of it right now. I'm in favor of the short side. I'm going to be looking at, well, I'm going to go into my zones here. We're right at a blue zone, a blue 5-minute zone. I say I would think on the short side, I think 149.69 is a reasonable target.
And it all comes back to what time is she trading it on?
Yeah.
What is she managing on? What is this going to be a scalping? Because you're going to have ebb and flow of a market. That's going to happen.
Yeah, and I think that's an important point, Brian, to make is that if you're a scalper, what can work for a short for a scalp is still a long for a swing trade, and just because you have to pretty much ascertain what time frame do you want the trade to be working on. And there are some times where I'm taking a scalping trade and it turns into more of a trend trade because of just rather than taking a stop out, I'll see where it's changing direction. So rather than take the stop, I may try to manage it in the opposite direction. But generally speaking, pick one or the other and then go with that. Because oftentimes that does not work out very well. But sometimes if you have a small enough position, then sometimes there's nothing wrong with taking
it's a short-term trade.
Allowing a short-term trade to be a longer-term trade. If your position size is such that you can weather the storm, so to speak, then it's not so bad. But I'd be looking at right now, I'm looking at this area right up here. You see where it made some new highs, made some lower highs, lower highs, lower highs. So right now I'm looking at this zone. These are like little mini 20% zones here. So right now it's in between. It made a lower high, it made a higher low, and right now it's in between these two boxes.
And Christine, what was her entry point?
Nine
What
point
was that?
79,
Do it again now. 149.79.
37.9,
149.379.
79. Yep.
So she's way on down here.
This is the entry. Way down here. And you're short?
Yeah, she's short.
Yeah.
She came short out of a demand zone.
What
And
time?
where's your
What time did you get into this trade? This is one. This one you're going to be looking at here, depending on what time she got in. I'm guessing she got in over here someplace.
Yeah, she didn't say it. One sec, I'll let you know.
This is good learning right now. Okay, so she got in at 149.37. Her stop loss is 151. So that 151, that is not typical of a scalping.
I'm going to guess with the knowledge base that she has and what way she's been looking, she probably saw this drop, she saw this pullback, and then go, okay, it's going to go down lower. And all it did was bounce right off of this level right here, which is this blue fib line here. I'm going to guess that's what happened to her.
And I will tell you that your stop is in a really good spot. I mean, that was I don't know what made you choose that particular area, but for a scalping, if you're scalping, that's a big stop. I like that. I like where you put it. You don't have some of the tools that I have that we're looking at, and you put it in a very nice spot. I would have had my entry pretty much around if I was going to be short, around the 149.90 ish. Target is 149.17. See how that target looks. And this could be just like one of those intraday trades where it's not, trying to get in and out in 15, 30 minutes.
The bottom line is it is going sideways inside this range since overnight. I mean, where's the daybreak? My daybreaks on here. Oh, we don't have them on. Let me turn them on here. Settings.
Okay. If I'm looking at what she's done and she's typed it correctly, she has a price at 149.38. Call it 38. She has a target at 149.17.
Which is down right here at the this little right. Well, here's 149.14 right here. So yeah, the green line right here is 148.
And it is not scalping. She is not scalping.
Yeah, this for a swing, not a bad swing trade. I mean, it's going against you on this.
Well, my only worry about this one is that your stop loss is so far, unless you're doing what I do with swing, where you just stick it far enough away, and then you're going to take a picture and close it out a lot earlier. Your stop loss is quite a bit larger than your target. It's not close to a 1-to-1, and that's nothing wrong with that. If you're going to be monitoring this trade and watching the picture, and it's intraday, I would not be looking on a 15-minute chart for this. I would be definitely looking at more of a 1 hour chart, if that's what you got on, because it's going to look a lot different. Maybe a 30-minute to give it a little bit better breakdown.
Yeah, I'm on a 1 hour chart right now, Brian, on this one, and you can see right here. Here's where we had the nice drop, based around, whipped around, came back down, and right now I'm thinking this thing, well, it's still respecting this zone up here. It's actually still respecting our blue line right here, and it could wick up into this area. But I think once it wicks up in this area, that's when the rubber is going to meet the road on this one. It's going to. I would expect a rejection of this area on back down again. Mm-hmm. It is still moving down. We are right now. You can see where the moving averages are. Everything's consolidated inside this 36 and the 34 and the 62 moving average is all consolidated right in there. And this is right now it's in a point of this decision. Is it going to break to the upside, or is it going to continue down? Right now, I'd say it is favoring on the British 1 hour chart. It's kind of, well, right now it's It's basically,
Yeah, it's no man.
it's a no man's land right now.
Yeah,
So I
you
would
got
say,
it.
hey, hang
You
in there
got
with
demand
it.
zone. Yeah, hang in there. Pick a spot that you know that, okay, that's the maximum pain I want to take. And then when it hits that pain, get out of it and take the loss. Not a big deal. Just a loss. Looking at it, it's pretty much a flat top wedge that it broke, and now it's back inside the wedge. It gave you a false breakout, so you have a potential. I don't know if you'll get down to your target though. It's got some work to do to get that far down. So yeah, you'd have to manage this a little bit different. This is kind of a cross between a momentum trade and a trend trade. So you want to watch trend and the momentum Hercules to see what it may be doing for you.
This is one of those things too. Again, Danielle, this is really predicated on how big of a position you took. I would be, if I were in this position myself and I had a small enough position, rather than taking the stop out, I would wait for this thing to start showing the signs of turning around and then take another position to dollar cost average. And that way, by the time it came about halfway, if you took a position here, and you took the same size position up here, your dollar cost average is right in the middle, which puts you pretty much right back into these orange areas. If we were to draw these into that, just the old fashioned way where we did one like wick to wick.
And that's if you really believe it's going to be still going short.
Yeah, if you believe that this is the range where you got in right about here ish, we'll say. And so right now, if you took another short up here, if you felt like this thing is okay, it's hitting the moving average, it's going to bounce off of this. Take a short here, you have a short here. Your average is going to be right in the middle of our orange zone, which is going to be, and you want to have as much. You could probably get out to break even, and then if it comes back and retests this low down here, this lower 25. Let me clean this up a little bit. I'm getting too much stuff here, so let me go back into here. So say this is the range we're looking at. And Brian, now jump in here if you think if I'm off beat here.
No worries.
Okay. So if we have, here's our range now. You got in right down here at the low part. And right now we say, okay, here's our upper 25, here's our lower 25, here's our middle zone. It's coming right back into the middle. It's already off that pullback. It's already starting to turn around. You could take another position short, dollar cost average, and that would probably get your average somewhere right in this area. Well, be right. Let's say you got in. No, let's just do it this way. You got in. Let's say you got in right here at, we said 37-ish. 37, I think is what you said. And let's say you took another short right now, right at this price point, your dollar cost average is going to be right here in this orange zone. If you believe that it's going to come into this, retest this zone right in here, which it looks to me like it may just do, although you have this little 62 moving average here. But right now, I would say if you took it short, take another position short, and by the time you got down here, you're going to be about break even on your trade, and then just get out of it and then reassess.
Then you have the other trade management style where you had a buy at the same point.
Yeah,
there's so many different options.
And if say comes down, if you have a short here and you have a buy here, well, now you stabilized your trade, and so you can figure out which direction it's going to go. So if you have a buy and a sell together, no matter which way this thing can go 100 pips in either direction, and your price is going to stay, your drawdown is going to be pretty much the same. And then once it gets out of this range and it starts giving you a clear direction which way to go, unleash take the profit off the one and then double down on the other one to help you dollar cost average on the other side.
Can I share my screen real quick for this?
Sure.
Just
I'll stop sharing.
Different. I'm gonna hide this so she can see what we're talking about on this part.
The hedging part is basically it's an alternative to taking the stop out.
Right.
But there's risk involved with that. It doesn't come risk free.
Let me do this real quick. Guys, you guys are getting a lesson in trade management. Let's see. How do I do this? Okay, there we go.
Hit the share button.
Yeah, I know. I couldn't find it. Oh, don't be worried about being messy. Okay, so looking at the things that are simple.
Just one sec. She wants to send you a screenshot.
Sure.
You to
do
see.
Oh, that'd be good.
That's even
my
better.
messy trade
even better.
Telegram.
That's even better.
Okay.
So this is again, this is a higher time frame. So don't judge your trade based on this. She's already aware of her, and these may not be exactly on, but they're close. She's already aware that her stop is definitely a risk reward problem. Nothing wrong with this stop. The reason I like this stop is because it's out of the way of the broker. This wick over wick, maybe even for me, if I was doing swing, if it's truly swing, I would be putting it drop, base, drop. Now this is on a 4-hour chart. So she's not scalping. So now she has to determine what kind of swing trader is she going to be. Is she going to be the one that wants a day or two, 3 maybe, or I'm good with weeks or days. I'm kind of both. I'll drop down to the 4 plus, but when we're looking at this, it formed a wedge. Now this wedge can be identified on the 4-hour. It can also be seen on the 15-minute. So it's both. And so it came up, closed above, tested it, and came back down in. So I would almost notice there's no moving averages. And the question she's asking is, should I stay short? And I like where her stop is at is really where I would love to be, potentially my last line in the sand of an entry, because of this price right here, back at 150, 60 something. However, we got this wick here. We got this little area here. So there is some potential consolidation for the down. If it comes back down and does break, you are going to make your target. Just by the structure of this. Now understand, this is a 4-hour chart. Okay,
the thing I like about this is that it went up to that pretty much to where your arrow is, and it rejected back into the wedge.
Exactly.
And a lot of times those are those pullbacks that you're going to be looking at, where you can see where those head fakes
fake you right out, and they're going to fall apart.
Yeah, exactly. So I think you're still okay with it. Personally, I think you're still okay with the trade. I would hang in there with it if you have the
emotional
if you have the
inventory.
If you have the emotional inventory in your closet, then I'd hang into the trade.
Now understand, you guys don't see one of the tools I'm using. I'll show it here in a second. It's called SSI. SSI says the majority of the traders in this particular pair are going long, but it's been going down since. And so we know that people are getting stopped out. Just like Al said, this is a great position for people to take their money and run, and which if they do, it's going to continue down. Or this could have been a position where people said that's enough. And this is where we're going to start back up. Because if we look back historically, right about this area right here is where 149. Again, remember the yen pairs like those whole numbers. 149 across the board. That's a key number. We came back and we're actually testing this area right here and seeing how far. The last time it went here, it went all the way to here. So that's a bad sign. However, the last time we retested here, it only came here before it retraced back, but that's still a bad sign because it's over our stop. Looking at, but again, recently you're still in a downtrend. So when I pull the whole picture together for you guys, now look what we got. Now this is 1 hour fibs. So our 4-hour fibs, these are a little bit different. They're gonna be a lot wider. And then you'll see why these tools are powerful. She went short right where a demand zone was created. Where's that demand zone? Right in the middle of our wedge. Can it break the demand zone? Sure, absolutely. This is the critical place in a long-term swing. This is, can it get through here? That blue line will be your key. That's why I love where
you have a wick over wick right there too.
Wick over wick, which tells me also there's a zone on a lower time frame, but it's already into that zone. So that may zone, if it's a 2-hour chart, 1-hour chart, it's already breached that. It's already closed about. It's gone. It's not there anymore. So the potential of it moving down is still there. What concerns me about the move down is how far these candles have been moving down since. It's a pretty small candles. It's not moving a whole lot. These two were huge, but look where it stopped at. It stopped right at a red Atlas tool, and it rebounded from there. Now, if we put, just like we do everything else, it doesn't matter what you're trading. You have your Atlas tool, you pull your retracement and see where she's at on a 4-hour. She followed the rules barely. She did exactly what she was supposed to do. She came up, she took her entry at 139. She said 38, but we can call it 139.40. It's the same, in the hopes it was going to continue down. And she took her target right before the 23. It doesn't get much better as far as if she was doing it on a 4-hour. Her better short would have been up here,
which is right where it is right now.
Which is right where it's at now. Now we don't know, is it going to get all the way back down to here, or is it going to play that ebb and flow of 76 to 50, 50. That's what Al was talking about. You take an entry possibly and get down to 50, kind of break even. Or is it just going to go 76, 61, which it's already done 61. So if it's going to do anything, it's either going to go down to 50 or it's going to continue up. That's most likely.
It's either going to go up, it's going to go down, or it's going to go sideways.
But I love how even if it's a wrong trade, if it works out and it's a loss, this is great because she followed the rules. She did her entry above the 23 area. She put a target before the 23 area, and it just happened. And she put her stop way up here. I'd have done it just like this if I felt really compelled that this was the entry. Now, she said 730. The last time this price has actually been there would have been this candle here. So I'm guessing she got in right about here. And so we would not have seen.
That'd been like 2:00 in the morning, East Coast.
Right,
time.
it's her time. We would
think,
not have seen all that.
Yeah, I think she's in the UK. I believe.
Right.
Is that right?
Yeah,
Our
she is.
Our
Yeah.
picture
She
would
is.
look more like that. And so if she's looking like this, that's a good trade.
Yeah.
That's a good trade. It may not have worked out, but if the picture looked like this, we can all go, well, no, yeah, it's lost. Look what it did. We didn't know that was going to happen. But that's a good trade. That's her retracement back. The question now is this part. It created that demand zone. Some people that do swing trading, once it commences, it creates a zone opposite of their position. Like in this case, you were short and it immediately created a demand zone. We'll use that as their trade management. Say, okay, I'm out for now. I'll re-enter at a higher spot. You can do that. Or you can just, since you're in demo, this is a good thing. Since you're in demo, what I would do is I would manage it just like you would. Just manage it. Let it be what it's going to do and manage it however you think you should manage it. But I like it. I mean, honestly, that's my opinion. But
I like the
That's
fact
cool.
that that's taken a bounce off that 76.4% area, which makes me think it's still going to stay within that range.
And looking at the monthly, I know this is a long way out, guys. It's just sideways at the top. So that's a good, again, another good sign of a trade where last time it came into this monthly supply, which is at now, it came all the way down. The problem I see is just these demand zones that we created in between. And our whole moving average says to be low, short. Our SSI tool says to be short, although it's not a whole lot. It's 1.25. The weekly shows to be long, but it came out of a weekly supply. So it very well could come down to the blue line, which is at 145 area. So when you take all the big pictures in order, 145 is a long ways away. That's down here. It very well, and look where all the consolidation of demand zones are. That's where your real wall is. But you have some things in your favor on a swing, being these three. So it's just a little bit of a time play. All in all, good. So we kind of ran that one to the ground. Hopefully that helped. Get my charts back in order, I think. Only 4 hour, 1 hour, 15. Al, you want to take back over and let's look at some scalping trades?
Stop sharing and let me see if I can
Quit telling me what to do.
see if I can find where the starting thing is.
It's the green button.
This is the green button. Yeah.
Yeah.
Okay, there we go. Let's see what
I hope that helped everybody. That was a good lesson. That was a great lesson.
Yeah. The bottom line is we're going to get caught in trades. We all get caught in trades. I still get caught in trades. I get caught in what trade the other day. And sometimes you just have to take your hit and go with it. Sometimes you try and manage out and you make things worse. But that's one of the things we work out in these rooms and trying to figure out, get some ideas and you still have to make your own decisions, but we can give you some options about which way to be looking at. Am I sharing? I should be sharing British CAD.
Yeah, and I'm going to go ahead and close out a loss for myself as well. I didn't watch it. I was doing other things.
See, that's one of the hazards. Trying to teach and trying to, you forget to do some things and some things just kind of get away from us sometimes.
Small losses. It's not a big deal for me, just small losses.
Now, here's what I like about the British CAD. If you look at our Hercules, we have a 7.0, 7.0, 7.5 right now. So there's a little bit of a pullback, but it has, if you look at the moving averages, they're all in the right direction. Now we did get a little bit of a cross of the 5 and the 13. So right now this is consolidating. This is done with consolidation heading on up. So this may be starting to turn around. But here's our zone. And you can see, here's our red zone, here's our green zone. It poked down at the bottom, but right now it's in the middle between these two. Draw my chart. I can draw my chart. This is the zone we're working in right here. Nice and easy right there. Come over here, take a look at it, see where my upper 25. I just like drawing these upper 25 and lower 25% zone. Not because you really have to, but it just helps a visual on
Yes, for your visual.
where it's going sideways.
Yep.
Where my oh, come on, here we go. And sometimes people and then here's my mid range.
Danielle, I sent you a note in the chat to you to where to send that screenshot.
And here's my mid range. And now I can just if I even just take these off, I can just take these off right now. And this is my price action. Look at my 5-minute fib. And you can see right here where we are. Here's where we are right in the middle between this 21 pip, right between this red zone and this green zone. There's our 21, should be our 21 pips. Yep, there's our 21 pip zone. Now you see it's starting to break through this. It's just trying to bounce off of this little area right here, the green zone. Remember, these are 21 pips apart. Right now we're in the bottom third. If I go to my 2-minute chart, you're going to see that our 7 pip ranges are right in here. Each one of these little ranges are, so right now it's coming in right on a 7-minute blue, moving averages in the right direction. We have a nice little strong move up, have a pullback, bouncing off a moving average. If we get a close above here, we can take, looking at the British pound is strong. This is a pullback. And if I were to draw a Fibonacci on, I'll just draw this extension here. Here's my move up. Here's my 40% pullback, and my target's going to would be right up in this area, which is right at the red line, between the red line and the next blue line, which would be right about in here. If I must take this one, I like the fact it's pulling back right to that. I can move this out of the way. And you can see where, as this thing is starting to turn, wait till it gets done. If it comes back and we can get a close above the green, we can use this little zone right here for the next target. Right now, British is pulling back. The British pound, first currency of the pair, is pulling back. Now we just got a little bit of a flip, so we want to wait for this thing to flip back over again because we don't know how deep this thing's going to go. But right now, here's 7 pips. Here's another. So right now, from here to here, is looking, it's pulling back about 2 of these sections, 2 of these thirds, right to the blue line. I'd be okay with taking this. We have the strength on the 5-minute. We still have the strength on the 15-minute. I'd be looking at maybe this zone as an entry zone, this blue line to this area, this 7 pip zone. Here's my, I'm going to call this entry to buy. Entry to, where is it here? Well, we're just going to say this is the buy area. So at this point, once we get a nice little candle formation on here with a 1-minute, we get a nice little green candle with a wick, or actually a blue candle in this case, with a nice little wick came right down into this. You see where it just wicked right below, right to this blue line right here. This is a 2-minute blue line. Right now, it's still not done bouncing here. We're still checking. This thing could, what you don't want to catch the falling knife. You don't want to be trying to catch it for it to go long. You'll wait till it gets done pulling back. Two-minute blue, 2-minute. Right
As
there.
you're looking at this, Al, I'm looking at euro pound. Another great lesson when you get done with this one. It's in the middle of the meat when we talk about that meat area. Kind of correlates with the pound CAD.
This is basically your spread. You have a 2.2 spread on this one. Strong wick down. They're looking for stops. searching for stops. We get a blue candle, we can take maybe a buy stop right up in here. Wait till this thing, wait till these flip back over. Wait till we see the British pound starting to get strong again. Canadian dollar is the orange one. So the orange one is the Canadian dollar is still the second currency. So it's still showing weakness. But we want that pound to come back over. As this thing's pulling back, you don't want to be taking it while this thing's pulling back. Then start looking at the candle formation. Nice big wick on that one. I like that wick on that. It came right into halfway into our zone.
What's your spread showing on that particular pair?
2.1.
Okay, yours is better than mine.
2-minute blue line. Couldn't close below it. And be looking at perhaps a buy stop right about in, I would say a buy stop right around this area right in here. I don't think I can take it on this platform right yet. Entry to buy. And then the target would be up here. And if you look and see where that's 73.08-ish, right in the middle of that, 73.08. There's ours, basically 10 pips. If this thing gets in, I'll be looking at this for the target.
So you can't take that trade on your platform yet?
If I set it
You
up
do a market.
Well, I don't think I can. I don't think it's not set up. But let me see if I can set it up yet. I can maybe check it. Set up. I can set up a paper trade.
I was just saying, with your buy stop, you'd have to do it 2 pips earlier to get that point.
Yeah. With the spread right now, the spread's starting between 1.9 and it's roughly about 2-point spread.
And mine's 2.6.
And so the target, I said the target zone is going to be here. So this is going to be 7 pips. It's going to be right about the bottom of this. Again, we're not in the trade yet. We have this is still this kind of strong move up, basing. What we don't know is, and you see how it's kind of respecting this little wedge right in here.
There's that daggum wedge thing we were talking about yesterday.
That darn wedge thing again. See, we had a low, mid, a high, a higher low, a lower high, and here's a wedge. If it can break through this area, but you have the 62 moving average right here. Now, if you look, let's just take it to a 5-minute chart. That way, it's not quite as volatile. But here's a high, here's a low, here's your range, and now we have a higher high, we have a higher low. But right now we decide it's going to have to respect this range. Here's our moving averages. Here's our green coming into our yellow. Not changed yet. British pound still stronger. This is our middle range right in here that we do our Fibonacci's on. By using these buy and sell stops, it helps you keep, especially when you're in a pullback mode, it keeps you a little bit out of harm's way because you never really know how deep it's going to go. But I would project that we're looking at these moving averages right here. Here's the, see, this is the 13 moving average right here. You can see we're starting to bounce, looking to retest the 13. And we have where's my fibs here? Yeah, right here's we have a moving average right in here. The next 5-minute one is going to be down below somewhere. That's right here at the top of this, our zone. We have a lot. If we were to take a buy here, we could use our stop way down here. We'd both be well out of harm's way, well below the moving averages. Because if it breaks, it's going to break it, say, oh, wrong direction, come back in, you can just get out your trade. But right now, this is a pretty strong pullback right now.
Now, when you did your Hercules, you looked at which numbers for this?
I looked at the down here. Well, at the time we were looking at this, the British.
What?
It was
Yeah. What
it
on
was a
15
7 and
and
a
5?
0. It was a 7 and a 0 on the 15. It was a
Mhm.
7-0 on the 5, and the 5 minute and the 1 minute was just starting to flip.
Okay.
And right now, this is still showing a pullback. Right now, these are still in line. It's still, and it's not. You see how you have a 7-6 spread right now on this. We have a 7-6 spread. So right now, this is kind of close. This is the pullback. This pulls back right into our zone.
That's kind of why I keep an eye on that hour. I just looking at this thing, it's just kind of going nuts for you right now.
Well, it's just in a pullback.
Well, your CAD on the 1 hour is at 7, your pounds at the 5, and then you got that 30-minute where the pounds are 7, the CAD's a 6. I mean, you're just you're
Right.
like you said, you're in a wedge, and it's showing up on the Hercules.
And but see, like here's, if you look at this our box right here where we drew it, you can see it popped out of the wedge, came back, but it's got the 62 moving average right here. So right now, this could be this could be the head fake that we're often looking at. It's still showing that the British pound is still stronger on the higher time frames. This is where I want to see a breakout, come back and retest.
Interesting.
But right now, it's in sort of no man's. Again, I wouldn't want to be taking it long. I wouldn't want to be taking short. I still kind of favor to the upside in this being a pullback. Right now, we have pretty much a double bottom right here. This little wick pretty much tied with this wick. We're still in the box. We want to wait till it gets out of this box area. If it breaks out of this, box, we're looking at coming all the way down here to the 77.26 area. Or 72.20, 72.7. 72, yeah, 72.70 area.
Question question in chat box is, why is CAD so weak? No telling why.
Well, remember, we had oil inventory report.
Oil inventories they're probably just setting things up.
That's exactly right. They're setting things up. Right now it's 8:30. Yeah, they're just getting things set up, and it may just stay in this little range right now until 10:30.
And the Canadian dollar is tied heavy to the oil.
Yeah. So right now, and this looks to me like a pre-announcement move right now, is just sort of taking positions, pulling back. My guess is when the announcement happens, it's probably going to go up. Oil prices have been going up for the last 6 months. I don't see that changing anytime soon.
No.
So again, with a CAD pair announcement coming up, I just stay away from the CAD pairs right now. Let's move on.
The euro pound looks interesting.
Euro pound.
Mm-hmm.
And aren't those CAD news always on Wednesdays?
A lot of times
FYI.
Every
FYI.
Wednesday, the oil inventory reports. What'd you say that EuroCAD you're talking about?
Not EuroCAD, Euro pound.
Oh, Euro pound.
Yeah, it's pretty much the perfect picture of pretty much doing nothing. Well, it's well, if you put our Atlas tool on and you pull your retracements, it's in the meat section that we always talk about.
It's in the middle. It's in the middle of everything right now.
It's in the middle, and it's a great place to watch the Hercules to figure out, okay, which side of the trade you're going to be on. Because if you look at your percentages, let me go back to I'm looking at this on a 15, so I'm looking at a little higher time frame.
Well, I'm on a 15 right now.
Let me slide mine over.
If 15.
And he doesn't have the supply and demand, the Sherlock tool that we talk about. He doesn't have that, but that Sherlock tool has a supply zone. If you want to mark it, you can, Al, at 86.51.
86.51, which is right.
86.51 to 86.61 is the tested supply zone. 51 to 61. That is actually the fib number as well.
86.51.
86.52 52 is actually where the zone is located. 52 to 61.
86.52.
No, 0.8652. Yeah, we're not in pair.
8652.
Yeah, 865 to 8661.
0.8661. Right there.
And that falls right in our. I don't know where it went.
Oh, that's what happened here.
Let me share my screen. Just make it quick for you. It'll make it easy.
Okay.
We won't stay on it long.
God.
That's hilarious.
This is not a Monday. This is not even a Monday either.
Yeah, it's a Monday. It's Groundhog Day. So what we were talking about, I'm already in this short, but this was perfect. I got in here and looked at my Hercules tool. I like to look at all four. So Hercules. So here's your Euro 1, Euro 1, Euro 1, Euro 1, pounds 5, 6, 7, and 7. So it's in my favor. But when I got over here, it was just sideways. But that's right in the middle between the 76 and the 23. The cool thing about it is our Sherlock tool identified a zone right at our top 25%. It identified 2 demand zones at our bottom 25%. So we are trying to make money within here and here. It was perfect. Look, moving averages worked out. Now, who knows if it's going to work out or not. I would expect my stop is up here because if it comes back up here, we're probably going to crawl up a little higher. It's just, and my target's 7 to 8 pips away, and it's before the 38. So it just wasn't one of those rare ones where everything seemed to line up. And usually when those happen, it works out, but can't predict the future. This is just a mess, though. Just an absolute mess. That's that overnight stuff, though. Probably potentially this is where it all stopped. But just an overnight mess. I just thought this is that zone I was talking about. The Sherlock identifies, and most likely what I would probably do, and I'll go ahead and do it, is usually I would take this, put that there, get it out of the way, and then potentially if it comes up to this 61 and the momentum looks still the same on the Hercules tool, then I'm going to add to my position. Right now we're 5-1, 5-1. 7-1, and 6-3. So I'm still 3. We got a little pullback going on right here according to the 5-minute chart. But yeah, I would have no problem adding another position here. What I would do is I just come in here. What's the spread on this one?
Actually, I mean the pound is strong, so therefore it's going.
It's going to go down.
Short side. Yeah.
Yeah. And so I would come in here right about here, two pips away. And I would just do to add to my position, I would come in here and just do that. And if it doesn't hit, it's not costing me anything. But now all I have to do is monitor on my second entry, I go to 14 pips. Now all I have to do is monitor the Hercules tool. And so if that's the case, I'm going to pull this down to here. Now you just monitor the Hercules tool, and whatever happens, happens. And I can move on, and I monitor my holdings right here. So you can see I'm currently position 20 in the Euro pound and waiting for the Aussie yen to take off for me. Then I had my loss that I'm invoicing Daniela on.
Charge her a lot.
Yeah, yeah. I mean, there's nothing in this world free.
No mercy.
So, yeah, Al, I'm gonna let you have it again.
Okay. Right now, this Euro pound is looking the same type of scenario that we were looking at with the that other one we were looking. What was the other one we were looking at? The CAD.
Yeah.
Again, when oil moves, it changes. The world relies on oil, so. Let's see, here we go. Let's see that one. And we have a question here. Let's see. Oh, wrong one. I can close that one out. Get rid of that one. Let's see, right now we had the British pound still strong, British second currency of the pair. It should be going down. Right now we have a pullback. We have the flip over here on the 5-minute. This is a pullback. Here's our strong move down.
I would love to get it one more time.
Here's our strong move down. It's not like using this little tool for the retracement like this. It keeps the lines down. Coming down, there's our strong move down. Pulls back to 40. I'm looking at 40% pullback. So if it pulls back up into our range right here, right now, you see this little zone. This is, see how it's just pulling back. Whenever it pulls back, when it gets to my pullback zone, if I take it short, my stop is just on the other side of this little 10% range here.
So far, I'm missing this entry by a pip.
Yeah, and if I look at my fib tools, here's my 5-minute blue. Here's my 5 minutes. So right here's my 5-minute red zone right here. I'm just highlighting these so you can see them a little bit better because it's kind of faint on my charts. 5-minute red right there. And if you look and see, it probably went up about 7 pips. If I go to my 1-minute chart. So like I said, I tend to be a scalper here. Here's my blue zone. This red zone here is the same as a 2-minute blue. We had the close below. Right now we have a 1-minute close. Let's see what time is that. 24 at 25, which is now right there. That we just got a new candle. That's a 5-minute close. And it looks like it wants to go short.
Dang
we had
it.
the 5-minute close below that. Here would be the target down here. Here's our 7-pip target.
The fun of the game. I think I missed that.
These are 7 pips.
It could come back up, but I'm thinking this might move on further down.
I'm looking at British strong, and I'm okay with taking this one short.
Join me.
I'm going to enjoy it. I'm going to do it. Let's see, where's my chart?
Push that button. Now, again, as we said in the disclaimer, any trade that we take inside the trading room is not any sort of recommendation or advice that you should do the same. Take the trade, Al.
I don't have an account set up with this. Yeah, right now I got in right about here.
We got to get you locked in.
Oh. Well, I took it on my other platform here, so I'm in it. But I can't mark it on this chart and be able to show the. Let me see here. No, let me see if I can do change my broker down here. Let me do that real quick.
I heard something click.
Let's try this. There we go. So, boom, there it is. And I'm going to change this to my protection, stop, take profit. Let's see, this is going to be, let's see, I got in at 86.17, so my stop is going to be at 40.52. 86.52.
That's where mine's at, just a little bit above you.
86.52 is my stop. My target is 7 pips, so that's going to be, what did I say? 86.31. What did I get in? 86.31. Yep. Target take profit 86. 631. And I'm just going to slide this one up to my green line. Actually, put it up to a little bit. Just take my green line. There's my take profit. Then we'll see if it goes.
Is anybody else taking these trades? Anybody else in the Euro Pound? Put yes in the chat box if you are. Even if it's a demo, it doesn't matter. Just something that you can practice with. There we go. Thank you, Leslie. Yeah. The only way you get good at this stuff is actually doing it. Good. Eaton's is in.
Right now, I'm still okay. Right now, I'm looking at my British is still stronger than the euro. It's only by 2, but on the 1-minute chart, this could be a little bit of a. Let's see, I can take this off, move that over the way. Maybe just go to my 5-minute. If you go to the 5-minute chart, to take some of the emotion, little stress out of it. We have a trade set. We have our areas of strong move down. pulled back to here. Again, that one little, this tool is nothing more than the Fibonacci extension tool is what this one is. Here's the origin of the move, comes back down, here's the bottom. And when I just pull it back, I pull it back to where the retracement was, and I can read out the bottom how much of a pullback it was. It's right here, it pulled back not quite 38%. And I can actually have my stop. Well, I don't need this one anymore. I could put my stop rather than have my stop. Where's my stop here? That's my entry. Let's see my stop. Let's try to make sure I got the stop in here protected. Protection. The stop should be 86.42 at least. I could probably use a 42, 86.42. I can probably use. Should be right about in here. It should work. There it is. A lot of times, when I use this tool, if I find out where it pulled, where it ended, I can use this little zone here and put my stop just above that zone. It's like a 6-pip stop. And like I said, my target is down here. I can remove this tool now. So I've got my entry. Here's my target. Stops up here. Here's my 5-minute fib line. You saw I had a 5-minute close, came back, retested it, came back, couldn't make it above, and now it's looking like this went to British pound is stronger to the euro. And here's my target. Moving averages are good. Here's my 62, here's my 13, here's my 5. We crossed over the 34 and everything is below the 34, which is this blue line. And now I can be taking the short. I had the pullback above, wicked above, couldn't hit. Respected this moving average. And now we can just, here's a wick. Short parallel right down to the target. As long as it stays above this moving average, we're good. I could actually maybe move it over a little bit more like this. I'm going to move this over to the 30-minute time frame, right to there. You see how this little wick right over here, it came down and hit right at where my target is. That's right at that 2-minute fib line or 5-minute fib line. British pound still strong, getting stronger to the euro. As it's getting stronger, British pound second currency of the pair. Here's my target. And this would be target 1. Here would be a target 2 down here. And then you have thirds in between. Go to my 2-minute chart, my 1-minute chart rather. Put my fibs on. Here's my red, here's the green, here's the blue. There's my, these are all 7 pips apart, I believe. Double check. There's my 7 pips. So here's my first 7-pip target. Here's my next 7-pip target. Target 1, target 2 down here.
And for those who are scalping, Alan and I've been doing this for quite a while. And what we have found over the time, normally our 7 pips is easy to get. Definitely get that. But there are statistics that show you many times can get 14, but once you get past 21, it gets a lot more difficult. So if you are going to let your winners run a bit, be aware of about 21 pips. If it's a good entry, 21 pips is pretty much the maximum you're going to get on a scalping type trade without having an emotional pullback. It doesn't mean you can't still get the 21, but just be prepared to have a strong pullback before it moves on to that point. That seemed to be for our scalping, that seemed to be the line in the sand.
That's one reason why I like using the 2 minute, because it gives me those seven pip.
Right. The visualization of that. Yeah. And I told everybody in the chat box, guys, if you have trades that you're taking, take a screenshot, tell us everything about it, tell us what your purpose is, all that stuff, and send it to Hawkeye. And we will definitely take the time to look at it, get back with you, give you our thoughts. We're not necessarily geniuses, but we can see if it's and analyze it to see if it's a solid trade, or, you can't promise it'll be a profitable one, but even if it's a trade that you think you're going to do in the future, you like a set and forget type thing, send it and we'll look at it. It's better to see a trade that you've taken, whether it wins or losses, and see if you followed your rules. That's more important than anything.
Right
Most
now,
traders just don't follow.
And right now, there's no reason to get out of this trade right now. We're still looking. Now, if it comes down here to this, I would anticipate that it's going to come down and it's going to hit that green line and start bouncing. It may not get me out because of my spread. I have a 1 point spread. This red line has to come all the way down 1.5 pips below the green line before I'm going to get my target hit. Right, there's a target, and if it doesn't take me out real soon, I'm just going to X out of it and say thank you. See if I'll take the trade. See, it's hesitating right there.
Daniela, yes, absolutely. As a matter of fact, we're working on things right now to highlight it. They're going to be promoting it quite heavy. There's not really a trade room quite like this with Auvoria Prime.
See how the spread has not taken me out yet. We got to get that red line. Now,
just understand. Closed. Look at your. Can you flip to the 15 on this one, Al?
Wait, let me close the position.
Oh, you're closing out.
I'm closing out. I got my 7 pips.
I'm still waiting for mine to hit. I went a little bit further. Notice this is a great picture of what we're looking for if we wanted to re-enter potentially later on. Notice the candle we created just now. If it closed looking like that, the candle right before it is a basing candle.
Right here.
The candle, and the third candle is another strong move in. So you have a strong leg in, a base, and a strong leg out. That is what we call a drop, base, drop. That little zone where that green, it'd be the next entry if it bounces off of where Al says it's going to bounce off of. That would be a great place to consider a potential re-engagement of this.
This
pair.
Now becomes a retest area.
Mm-hmm.
So here's my 2 minute, or here's my 15 minute. Actually, is that 15 minute green? Is that I'm on a 15-minute chart. Make sure this is right here.
Once this thing closes it at the 45, I'm guessing that we'll have a supply zone created there from our Sherlock tool. It's not done yet because we are coming right to the place where we went to a low before, and we're real close. I'm getting ready to get one target hit. Second target's going to be hit shortly. I think this is going to move on down to that 23 over time.
Yeah, I think this is going to be. I think this has a really strong potential of
86.20. I'm guessing 86.20-ish. What do you see on the distance?
Well, I got 86.24 right here, so that's another 21 pips away, right? Or 21 pip. 5 minute chart. Here's my red 5 minute zone. Here's my next green zone. Here's the 21 pip range, and right now you can see where it's breaking through the. Now, remember I said that on the 2 minute, when I go to the 1 minute chart, I'm going to have 3 zones in between this red zone and this green zone on the 5 minute. I'm going to have my 3 7-minute zones right in here. Take a look at this. When I go to my 1 minute chart, I put my pips on, and they're on. Here's the, let's see where we're at here. This is the price. It's right at the red line here. So, all right, let me see here.
My target has been hit. And what's funny about this, what he's drawing, that little area, that drop base drop is also at your 50, and it's coming down to your 38. So I'm going to move that entry that I showed you guys earlier. I'm going to move it down to 33. If it bounces, I'll get back in it as long as momentum shows.
It's going to be a 2-minute blue. Remember the blue lines, a lot of times it goes from blue to blue, especially when swing trading, it goes from blue to blue. On the scalping, it goes blue to blue oftentimes. I would expect this thing to come down and retest this blue line on the 2-minute. But right now, it's hard. Sometimes it gets a little confusing because my ask line is red as well. So when it's at a red line, sometimes it gets a little confusing. But here's my green 2-minute.
You said 86.24. You see the stop place at?
Yep, that's the green 2. Hang on a second. There we go. There's a green 2-minute. 2-minute. 86.24 is where I saw 24. Green. Let me get my 5-minute chart back up again.
Eden, sort of. If you look at that green candle and it truly have an analysis, it's not really bull, it's just green. If you look at how it entered, where the opening of that candle was, it's really a seller's candle. It just happens to be green on the 15-minute. I know. Now, when you go back to your 15, we'll show them that too.
15.
Yeah. He's asking about the bullish, our retracements. He said drop, base, drop. You got a strong leg into that zone, a basing of 1 to 2 candles, and a strong, in this case, a drop out of that area, leaves a green candle. But if you analyze that green candle closely, it's green, but it's not really a what I would consider a bullish candle.
It's almost like a doji. It's almost like a doji.
Yeah, but if you look technically and analyze this carefully, notice the wick on the top of that body is bigger than the wick on the bottom, and where the body of the candle is lying is below midway. So that tells me, even though it's green, and yes, it closed at a higher price than the previous candle, the sellers came in and pushed it back down. So it's a seller's candle, but green. But yeah, that's the area that we're looking at. And we will show you here in a second. Once we get to about the 3 or 4 minute mark, I'll share my screen because he doesn't have the Sherlock tool on TradingView yet. The developers in Auvoria Prime are working on that now.
Go ahead, share your screen there.
Oh, okay. I can do that.
Know when you're ready.
I'll kick you out is what I'll do. How about that? Yeah, that's this area right here. So what we're looking at is, if you really look carefully at the analysis of a candle, this is candle analysis is what it is. So you have your 2-legged drop in is what I would consider this, a true 2-legged drop, base, and a strong move out. So we really like to have strong legs in, strong legs out. This will base, and what will happen is here in a moment, we will have a zone that looks like this, or pretty close to it. It's going to come in and look something like that, except it's going to go this way. And so that would be, if you notice where my entry is, it's 2 pips before that. I'm ready for that if it happens to bounce. Now, we have dug into this 38. It actually went further than I thought it would. And Al had mentioned the 24 mark. That's where my target is on the next one. So I would expect at any time for it to bounce at some point. If they want this price to continue to go down, the bounce points will be down here. And then it may never get back up to this 50 during our trading session. Yeah, it's candle analysis. There's several good books on that. But again, the cool part about what we have here at Hawkeye is all the tools do the work for us. I don't have to think.
We're glad he doesn't.
Yeah, you're glad that I don't. But what I love about this particular pair, and this is why I said it earlier on in our session, is look where our strong demand zone is, right on our blue line. That's the one I'm worried about. This one, okay, it's not fresh. It's been tested. You can see the dashed line in it. It's been down here before historically, and it bounced off, obviously. It hasn't dug any deeper. So it's sitting right here, 2 pips behind our retracement tool. So this is the zone. Remember, yesterday we talked about this is the zone you don't want to be short in as far as entering a new short. If you're already in a short, you prepare for some heavy water for a little bit of time, some bouncing and some movement. If you are aggressive, really aggressive entry, let me go back here. I would say the 86.30 would be an aggressive entry at this point. If you just felt like you are inclined to have to be in this trade. This is a excessively strong move. But that's on a 15-minute chart. It looks on a daily and you won't, it's hardly a deal at all. On the hour, you probably have a pretty good little leg. Yeah. Look what's happening on the daily now. Demand zone is gone. Once this hour closes with our session here, that one will be gone. We're digging into this one. So remember I said we're getting close to the bottom here. That's that daily zone. That's why this is all power, because all the time frames start lining up together. Okay. And his NAS 100 ended up dropping over 200 pips from his entry yesterday and then retraced back up. Hopped out with a 150 pip profit. Yes, that's nice. That is good. Well, you could always expect to bounce at some point. Definitely expect to bounce at some point. Al, we have no open trades currently, correct?
No, I'm out of everything right now.
Let me see something real quick. Okay, I'm in the Aussie yen real quick. We'll look at that. And then we'll go to your indices just because that'll give you time to prep up. Do you have time to prep up for that?
Yeah, I can try. Yeah, let's see what the German
gift.
30 is doing. We'll see what the German 30 is doing here.
I'll let you look at that while I look at the Aussie yen. Again, it's the same picture. Now, the noise is because we have all this blown up and I have entry points. I have 2 entry points. So if I wasn't in this trade, you wouldn't see all this noise. And that's part of the problem with trading is that the lines and things start. But look at this nice demand zone. Sherlock picked up right at the red line. This one's your wall right here. 79.92. You call it 79. You can call it 80 if you want. But this is the one I'll be worried about. I have now used this demand zone as my support level on my trade. It came up, almost got to my target, and it's fallen back. Not a big deal. Not a big deal at all. We'll wait. If this happens to close below the yellow, I'll move this up a little bit closer because all it's doing, my bet is we've had a close above the green. It can very well come down to this area down here where I entered in the first place and take off if today's momentum overall is in the strength of the Aussie yen. If not, then I'll get stopped out for a loss. 1 pip away, 1 to 2 pips away from profit, which is kind of sucks, but it is what it is. And it did form a wedge. If you notice a flat top wedge, it's forming right now, and it just did a head fake in. So really, if I'm drawing a wedge out, I'd probably do it right here. It's going to follow this blue line. So I want to be 2 to 3 pips behind this blue line with my stop. That's how I trade manage this. So one position's profitable, one position's losing at this point. And I could close out for a profit now if I wanted to. If you look over here, as a matter of fact, with the 8 o'clock hour coming, I'm going to go ahead and close out all positions, take whatever 5 pips I've got, and I'm done for the day, get out. And I almost recovered from Daniela's loss this morning that I'm going to be billing her for. Well, I went ahead and took the profit and did what it needed to do. Now I can get out and focus on my indices or whatever else, or go play golf. Either one. What 3 pairs would you pick to really focus on? Wow, that's a loaded question. I would always say the 3 pairs. I would always take the Hercules tool, and because these are going to be your majors, and then I would take the ones that have the least spread, because when you pair up pound Kiwi, or you pair up there was Euro Kiwi, I think it was, or Aussie Kiwi, those end up with 4, 5, 6 spread points. The other one, you want to be around 2. 1 to 2, 2, 2.5, and that will vary depending on what the market is. So I would always stick to the majors here, and then as you're analyzing, depending on what time of day is, check your spread, and then I would never eliminate. Like right now, I'm looking at CAD yen. So let's just quickly look at CAD yen real quick, and we can do this real quick and see if I want to be in it or not. I can go to CAD yen. I trade very few. I analyze a bunch. Right now, this one's right around 3 for me. Not horrible, and it's in a place where I would consider buying it. So I already know it's low in the tracing. So I will go ahead, and since I'm a relative aggressive and it's right here at the green where I'd want it to be, we had to close above it on the 15. So technically, a retracement back to the green line would be an entry point for me because I'm aggressive. And I just want to make sure once this thing gets set up that now it's at 3. I'm not real thrilled with the spread. I'd probably still do it, and I would just take a smaller position. And what I like to do is, because I know the spread, I add 2 more pips to both my target and my stop, and it still plays within the game. And that's how I would do it. So there's different people. One of our traders, Pierre, is going to be one of our coaches. He loves the CAD pairs. I hate them. I hate them when it comes to swing trading. I hate them. So you'll find certain pairs that you will really like to do and certain pairs you won't like to do. You'll historically, when you start tracking your orders, you'll find that you lose all the time on one particular pair. Makes absolutely zero sense why, but it just seems to happen to work that way. And for a while, I couldn't trade a CAD pair to save my life, but the pound US was insane for me. And then the pound US started switching and it became the Aussie US. It seems to be the US pairs a little bit because the US dollar is world currency pretty much. That seems to be the stable one, which is ironic. Let me fix this real quick. Al, you ready to look at an indice real quick?
Yeah, we're just about ready to, looks like
Give
we
us
may
about
be
a
getting
10-minute.
a move. We may be able to get a move on the German 30 here.
Okay. There we go. Let me get it out of here and let you share your German 30. That will be for anybody who loves that stuff. And I hope that helped. That was really a no answer.
We have a lot of no answers. We have a lot of no answers.
Other than stick with the majors and watch your spreads. You don't want to be doing any exotics.
See, let's go with this one right here. This is my German 30 I'm looking at right now. And what I'm looking at right now, here's a 5-minute red zone right here that it broke up above, pulled back right now. Here's would be a target. This is at 15,352. We're about $7 away from where we are right now. It does have a little bit of strength. The yen or the euro is weak. That favors it to the upside. But I'm looking for a 5-minute close. Let's see where we get a 5-minute chart here. We did get the 5-minute close above the red. We have a little bit of pullback. We could probably do a buy stop right up in here around the 15,346. Let's see if I can do that here. And may buy. Let's see if I can do this. Doesn't trade on the paper trade. Let's try the paper trade here.
That may work.
This paper trade should work. So I go with a buy stop. Looking at right around the we'll be looking right around this area right in here around the 15,348 for a buy stop of 15,348 all the way up and around this area. Let's say right about in there. And we're going to go for, I'm not sure what the market is, what the ranges are on this. And then the target would be 52. 50, call it 53 target. $53.
As you guys are watching him draw, just so we can confirm what we did on the euro pound, that drop leg did form that pink zone just like I thought it would. And so it's there.
And we're going to go with a buy. So here's I guess up here to the buy. Here's my target. And we wait. In. Push up to, I want to see it come, hit that 2-minute fib line.
If you trade the indices, put a yes in the chat box. I want to see how many people we have that we want to make sure we focus on that too. Or you're open to it. Let's say that. Open to it, learning about it.
Boom, there it is.
Okay.
Target done. In and out.
In and out, money made. Yeah, okay. We got a lot of people who are open to it and excited about it.
Now that was pretty much Eva's method, which really, I'm getting to have respect that even more and more. That's really what's a nice way of doing it with this. Because we don't know how, now it hit the 2-minute. Now the next 2-minute fib line is right up here. So if it could very well go on up to that one. it's breaking out of this zone. This was my zone that I drew my 25% levels in. I found my 5-minute levels, and then I'm now looking at my 2-minute levels. So right there was a 2-minute. That was a 2-minute red. So here's a 2-minute green. We're going to mark this as a 2-minute. And so these are all of our. This is all of our Atlas fib lines. I'm not even drawing. I'm not having to draw anything. I just find that the ranges, the institutional level. I call them institutional levels. Now, keep in mind, institutions don't trade on 2-minute charts. But these are the algorithms that develop those levels. You see, it came right up to 2-minute, wicked up, and now it's got to get through here. Now, if I can get through the top of this one, if I can get through this level right here, I could probably put another buy stop in above this, the highs of these candles, this blue candle. I could probably put another buy stop. So I could go with another, we're going to go with a buy stop. Looking right around the 15,363, 15,363. And take profit would be 15,363, and then 5 would be take profit would be 1568. Buy stop, boom, there it is. There's right. So now if it comes up here, it gets me in, gets me out, and I'm done. Looking for that, because if it closes above this 2-minute, it's probably going to, if it has a strength, the euro is still the weakest of the bunch. So this got a lot of upward potential. And I can actually probably move this thing up to there.
I think we have another Ruben in the room. Daniela says whatever she does, basically do the opposite.
No, not another Ruben.
So before you ever enter a live trading group, we'll check with Daniela.
Check with Danielle.
And if she's long, we'll all go short. And if she's short, we'll all go long. And thank her for her contributions. That's great. Oh gosh. And I think Fernando is just a Forex only person, which is more my style. I'm learning these indices things, but it doesn't come as easy to me. Hey, just know if you're a new trader, it's going to feel like everything you do is the opposite. Just initially, trust me.
And you're going to feel like you're taking a drink of water out of a fire hose.
Yeah. Drinking water out of a fire hose. We did a video yesterday, and one of the things that's funny about Hawkeye is our history. We actually started with a group of people who we thought we knew what we were doing pretty much, but none of us could ever be successful in trading. We were basically all getting ready to call it quits, and Al and I pretty much were the last ones standing.
we were just too stubborn to quit.
We were too stubborn to quit. And next thing you know, it started flipping for us. And so we identify with the guys who come in here going, I've tried everything. I've read every book. I bought every video. I've chased every shiny new object. I've done all that.
I spent thousands of dollars in courses and classes.
We have too. Fernando, that'll be coming in probably the end of the month. But our goal now is because we, Al and I both know how to, Eva, Pierre, all of us, we've been there. We are a traders group. We're
traders. We're not marketers.
We're not marketers necessarily. And we've been there. We've been that frustrated where everything I trade goes the opposite way. And so just hang in there. It will come all of a sudden out of nowhere. You'll start getting things right. And you'll go, hey, well, look what's happened. Then you'll get overconfident, and then you'll start getting too aggressive. And then you'll back off again. And finally, you'll settle in. And once you settle in, that's when you know you made it. And that sometimes that's fast for some people, and some people it takes a year or two.
Our goal is to try and give you the tools that took us a decade to figure out.
Yeah, and had
try and save you that time.
And we've had people program no alert system necessarily, but things that weren't lagging, that were price action based, and that cleared up the murkiness of trading. And I think the Sherlock, Hercules, and Atlas all together pretty much take a lot of the guesswork out of the way, and then it becomes the emotional side.
Still not 100%, but it does help.
But my swing trading is around 87% wins. So, I mean, and it's just 15 to 20 minutes a week. Yeah, me too, Ann. Me too. Nothing wrong with the other part. Nothing wrong with the other part. But I'm definitely a trader. And our goal here is to still be, 75 to 80% correct in our trades too, if not higher. And like yesterday, we had 10 trades and we got 8 of them right. So we're right at 80%. That's good, easy math. And by the way, the trade that we took at the end of the day ended up being profitable. So it was ended 9 out of 11. So it's a little bit higher than 80%. So some days will be 50-50. And I have a rule that if I lose 2 trades on my live account, I don't trade anymore in live. I go to demo again. 2 trades in a row are done. I'm done. And I'm only shooting for 2 to 3% gain a day. I'm not going for the 5 to 10% gain. That's greed for me. And then I get stupid.
We call it get your daily bread. That's what we call it.
We have a tool that we definitely want to sell everybody. It's called the BTE tool.
That's a great tool. It's a
really, great tool.
Yeah.
We don't show it very often, but we use it all the time. And we actually had a trader who was willing to pay money for it, and we just gave it to him for free. It's called the between the ear indicator. And most of your trades all become between your ears. And he really was ready to pay for it. He thought it was an actual tool when it's actually his own brain.
Oh,
so
I just saw a trigger on the German 30.
And you're going long again?
Going long again. My target is right the 2-minute green line, which is right at the 15,371.
And I would just tell you to keep doing it. But maybe, with the Hawkeye, if you know traders, this is a trader's room, definitely a trader's room. There's just trading here pretty much. So there's some things that you can do that will help that and bring people along that way. I'm kind of the same way. I tell people about Hawkeye a lot, but I'm not really selling it.
And one thing about it too is when you're in this room, you don't have to buy the tools to be able to see what we're doing. We're going to show you what we're doing. If you want to buy the tools, we'll make them available for you, but you don't have to be in our room and pay for it. You just have to come in the room and learn and be active and learn. Yeah.
Well, Al, are you out of that trade yet?
No, not yet. It's still kind of, it's sort of checking around those wicks, but
it looks like on the euro pound that I told you guys, if you really wanted a really aggressive entry to enter at that one point, well, I did. And it looks like it's doing another leg out where we're potentially doing another drop-based drop, which is kind of cool. That's a double protection for my entry. But we'll see what happens at the end of the day. And Al, we're at the top of the hour.
Okay, I think we need to call it a day here. Again, we thank everybody for being here. We appreciate every one of you. Session. We appreciate the questions, the comments, the camaraderie.
Danielle, thank you. Thank you for letting us share your info this morning. That was a real great lesson.
Thank you, Danielle. We really appreciate that. And with that, we'll see everybody tomorrow. Same time, same place. See you then.
Take care, guys.
Have a great day. God bless everybody.